Hello, my name is Brian Yampolsky.
And I'm Joe Ashton.
And this is the Inside Track. And today's topic is we're going to give you some updates on what's going on with FHA. What's going on with FHA?
Two changes coming. One is another increase to the MIP. It's very small this time, but cumulatively it could be significant.
I'm going to tell you exactly what that means. As a buyer, if you had a $200,000 loan with an FHA loan, your monthly mortgage insurance premium is going to go up by about $17 a month. It's not huge, but compared to what it was a few years ago, what was it?
Well, it was 0.55%, then it kept going up, and now it's going to be 1.35%. So the difference on that same $200,000 loan is now cumulatively $134 a month on a monthly payment.
Now, there's a reason why FHA is raising that premium. The reason is simply they don't want a bailout. They don't want a federal bailout like so many other entities have had to get. So they're going to charge every home buyer that they have more money instead of charging everybody in the country higher taxes.
Okay, so this latest change is taking place on April 1st, but the other change, which is probably in my opinion more significant, is coming on June 3rd, and that's where the duration of how long that MIP or that mortgage insurance premium stays with your loan. In the old days, and currently right now still, up until June 3rd, once you got to 78% loan to value from your original purchase price, you could drop the MIP. You could get rid of that $134 of extra payment. As of June 3rd, that's going to remain for the duration of the loan.
That's right, and if you think about it, sometimes people buy a house and they think, well, maybe we'll refinance in a few years when we have enough equity, but I don't necessarily think that's going to be as popular a decision because when rates are right now around 3.5% to 4%, a few years from now, if you think, well, I'll refinance to get out of my mortgage insurance, but rates are now at 5 or 6 or 7,
right,
it's not going to make sense. So FHA is going to hold on to those loans for a longer period of time.
Yeah, and we think that's on purpose. We think that they really need to fill their coffers, and so they're changing. This is kind of a subtle thing. No one's going to really care about the duration when they're putting down 3.5%. But when they finally get that 22% equity and they want to drop their mortgage insurance, they won't be able to automatically. They still can by refinancing, but I think FHA is very aware of what they're doing. They know rates are going to be higher, and they know that people aren't going to just drop it, and they're going to be less reluctant to refinance.
So what does that mean to you? It means that you need to get good advice on whether or not FHA is still a good option, or look at the conventional options, which there are some really good ones. And if you call us at the number on the screen or email us, we'll be happy to talk about the differences between FHA and conventional and make the right decision for you.
All right. Good talking to you again.
Thanks for calling.
See ya.
Watching. Bye.